All right, guys, these portfolio reviews, man, these are gems. This is going to be the flagship account that I own. This is over $100,000. This is a very healthy portfolio. It's very well established. I've taken some trading profit within this to generate the positions that I declared to you during this video. Now, the links to the video and all of its holdings are going to be contained within the description of this video. So feel free to click on that and check out the actual holdings for yourself if in fact you can't follow along with the video as I review them. I'll provide those open transparency to the group. I think it's a wonderful opportunity to see what an established portfolio looks like. Now, this has taken me many, many years to build this as provided to you now during this video. So please keep that in mind when you're reviewing these portfolios. You're not going to be able to generate this stuff immediately. Take a wealth building strategy, and if you're sitting back saying, wow, I can do that too, you're absolutely correct. Anybody can do this, okay? It just requires a little bit of wherewithal and a little bit of an incentive to start the program. So with that, I'm going to drop you guys into my individual retirement account with Merrill, and I'm going to walk you through the individual holdings that I have. Please enjoy. All right, guys, very cool. Welcome into the business end of the Roth IRA account number one. This is typically how I roll these portfolio reviews out. Most of the subscribers to the message are interested in the actual holdings. So you can see in the left column under the symbol, if you want to look up the ticker symbol after the reveal, you certainly can. But as you follow the chart across, you'll start with the ticker symbol, work across the quantity and shares that I own with the fractional portion. All of these holdings are set up on dividend reinvestment as the goal within this account is leaning more toward dividend growth investing. Every single one of these stocks do pay a dividend, as well as a passive base at the bottom end of the portfolio. We'll cover those. There's a good exposure protocol for the ETFs that I own. Strategically aimed at certain markets, whether it be in this portfolio, you'll see that we're going after some good dividend yield and some foreign exposure, but we'll get down to the bottom end of that. Not a whole lot's changed. This portfolio is really built to enter into 2020 without doing a lot of additions. You can see here the Apple position has been reduced just a little bit, which is fine. Boeing still continues to underperform as they work through their issues. Bank of America has just done very, very well. BlackRock in financials is a new position here, rather substantial position, I might add, but a nice dividend payer to boot. But these folks are the ones that actually manage the thrift savings plan. So we own 10 shares of the company outright. So we'll wait for those to start dividend reinvesting as well. Citigroup I've owned for multiple years. You guys can see that's doing well as well. In the financial sector, I think we're slightly still underweight a little bit financials, but we've got some really good broad exposure. So we're satisfied at the moment with what we've got. Caterpillar and industrials, CVS Health, a relatively small allocation here, still a touch underweight in healthcare, but that's fine. CVS is a good dividend payer as well. We drop down Disney in the communications sector. Communications really looks very, very good right here. Disney's one of my largest positions. I don't know if it's quite in the top 10 of holdings. I believe that it is. Relative to the total overall portfolio value, but Disney's one of those cornerstones in the portfolio I've owned for quite some many years, and we'll continue to own it going forward. We're right on target with our allocation there in respect to the total overall value of these holdings. FedEx in industrials, IBM has been a new addition this year. Which has already gained a free share, 0.6 of a share anyway here in the dividend reinvestment. I think it's finding a base here at 135, so we're good to own that. And another old school technology company, Intel, the chip maker,
a relatively small position. If you guys follow me closely, you know I liquidated a position in the other portfolio, took a really nice trading profit in there, put those profits to work elsewhere, and then reestablished the position in this portfolio just to try to gain what level of technology exposure I wanted. I'm still drastically underweight, and I've done that for a strategic reason. I feel like technology is a little bit overbought right here, so we're fine being underweight. We still have very good exposure, not only in the single stock holdings, but with the ETFs, as well as some of the other holdings that we have in some of the multiple other portfolios. So we're satisfied being a little bit underweight. That's totally fine. Kimberly Clark was a new position we added in 2019. That will be one of those staples, cornerstones in this portfolio. I don't plan on ever selling this company. We're going to continue to add to it. I think these smaller share values are indicative of starting positions for me. Don't get intimidated when you look at a portfolio like this, guys. I started with one block of 10 shares of AT&T. That was the very first stock that I bought, I guess probably going on about 10 years now back, maybe 10, 11 years or so. But I remember starting my Roth IRA, this very account, which has changed hands via rollover from broker to broker over the years, and that was the very first stock we bought. We bought AT&T, and the other stock was Kraft at the time. Those were the first two stocks that were split up and put into these portfolios. I believe at the time I owned a couple of mutual funds in these. So we've really done well to leverage those positions. We've strategically bought and sold stock, added to the portfolios over time. So we've really paid some good attention and taken a real concerted effort to try to build these up as quickly as we can and establish something special. I believe we've done that, but I think the real takeaway for you guys is to understand a couple of things. These portfolio reviews are not revealed so that you can sit back and say, wow, I wish I have that. I would rather you do the contrary. I would rather you look at something like this and say, wow, this is something that I can actually accomplish myself, and that's absolutely true. The best time to start is as of yesterday. So as long as you've got folks like me advocating for people that can do extraordinary things that don't believe that they can on ordinary income, I'm a testimonial to just that. I have not built this up by way of a job that pays over an average salary. I haven't built this up, and I don't really believe that the size of your portfolio is indicative of your strength as an investor. I believe your ability to grow wealth is going to be directly correlated with your desire to grow wealth. No more, no less. So that's the real takeaway from these portfolio reviews, is to see where I've come from in such a short time and now currently where I am. So that's really the power in the message, and we'll continue with the review into Coke here, another staple in the portfolio, a dividend payer. All of these stocks do pay a dividend in some form or fashion. Lockheed Martin has just run up here with the geopolitical risk. We were down in this position, and it's just come positive again, so we're fine. Owning a relatively small position, but still large enough to put a few $1,000 to work in Lockheed Martin. McDonald's was actually a fairly new position again in 2019, and really lended some strength to my discretionary aspect of the portfolio to get that discretionary exposure here with TJ Maxx, along with Starbucks as well, when you mirror that against the other portfolio, and then McDonald's in this portfolio. So we're satisfied owning this. It's a relatively larger position here at just over 20 shares in McDonald's. So we'll continue to build that up and try to get some generational wealth built up for its intended purpose in this. So Medtronic, nice position here in the healthcare and the surgical robotics aspect of healthcare. Microsoft had a good day today, ran up nicely. Well, we've actually got a larger position in Microsoft now than we do in Apple Computer, which is really not very standard for my typical posture in this portfolio. But I really just feel like Apple's run up quite quickly now, and which is fine. We still hold 6 shares in there that we're holding strong, but we'll continue to let those shares work. Nike we've liquidated based on valuation. I did not like what I saw there, so we went ahead and liquidated. Northrop Grumman has come back almost equal. We've got a smaller position, just 5 shares in Northrop Grumman. Procter & Gamble I wouldn't choose to have with Kimberly Clark in the same mix of stock, but that's fine. That's the way it's shooken out in this portfolio, which is okay. And in the staples, we went ahead and took a position in Philip Morris toward the end of last year, which was obviously the right move. It's continued its march north. Just a great dividend paying stock, and we're probably a touch overweight there, so we're not going to be adding any more to staple. I pay particular attention to the amount of allocation, and you'll be hard pressed to find some gaps in this portfolio, as all the sectors are represented in both single stock as well as some international diversification toward the bottom end of the portfolio. So Royal Dutch Shell, obviously, kind of disappointing over the last few days anyway. Oil's continued to fall out of favor. I think that's going to change in 2020. So we'll continue to own this. Honestly, I kind of look at this as almost like a fixed income type of a holding with the opportunity for some capital appreciation. It's obviously lagged here in the portfolio. That's fine. We'll continue to own it as being one of the big 3 in here, with Royal Dutch Shell and Exxon Mobil in this portfolio represented. Royal Bank of Canada in the financial sector, another 4% yielder. Good to go on that one. TJ Maxx, 40 shares in here, waiting for that first dividend payout to start accumulating in the discretionary. That was just one of the best of breed, actually. Very excited to own this name in discretionary. I feel it's probably positioned to profit the best going forward in the and leverage a strong consumer now with the discount clothing line. United Tech we're continuing to hold in the industrial sector here, and then I'll drop down and just cover quickly the Exxon Mobil holding here at the bottom, continuing to hold that. For you guys that have followed me a while, that's been in there for a long time, and we'll continue to monitor that. Maybe look to pick up a little bit of shares at this recessed rate. And then basically we've got 2 portfolios within the portfolio. Here at the bottom we've got a couple of sector ETFs, both utilities and real estate. This is an attempt to grab sector exposure in each of these where I couldn't really determine that there was any value in picking up single stocks. I figured if I was going to own the sector and it did well, then we would appreciate in value by owning it. Conversely, if it did fall out of favor, we would be fine there, as this ETF pays a really nice dividend as well. And I felt the same way about the utilities as well. So those 2 are here, and then the emerging markets here gives us that international exposure to the emerging markets. VYM is the domestic dividend payer, and right below it, VYMI is the Vanguard's international high dividend yielder. So a couple of funds that I'd really like to build up. You can obviously see those are a couple of the bigger positions within this portfolio. And then finally is the small cap value. I do own the small cap growth in the other portfolio, so those 2 really complement each other well as the small cap blend in the first trade portfolio. So that rounds out the review here, guys. We're just over 102,000, just a touch of cash in this as well, but mostly fully invested into this particular portfolio. This is the flagship. Again, with the strategic goals, I want to emphasize of dividend growth investing, heavy tailored toward single stock equities at about 75%. The remaining being the diversified ETFs across not only domestic but international markets. So if you paid particular attention, you can kind of glean some of the strategic goals that I have. And I believe we're meeting those in this particular aspect of the total comprehensive portfolio that we're working with on the Independent Investor channel. So with that, I'll send you back to YouTube, guys. We'll close out the video.
All right, guys, welcome back out of the portfolio review. I hope you enjoyed this comb over. This is how we finished 2019. This is how we'll take the portfolio into 2020. Looking to get a little bit more passive with my program, dividend growth portfolio, as indicated by about 75% of the holdings. The remaining 25% is made up of Vanguard ETFs. That gets me that diversified exposure across the world, getting me that international exposure. So we covered those holdings there. Hope you enjoy the transparency. The real takeaways from these portfolio reviews is for you guys to understand how individuals seek out their opportunity in the stock market. Now, my way is not the right way. It just is right for me. And that doesn't mean that it's going to be right for you. But the real benefit to these videos is to sit back and understand what is possible. I do not come from money, okay? I work a blue-collar salary, and I was able to wealth build this portfolio over time, subject to a lot of mistakes as well. So if you can just eliminate some of those mistakes and deploy some of these strategies that I talk about with regard to wealth building, philosophies of paying yourself first to get you on the right track, and almost eliminate a lot of those mistakes that I was subject to in my investing life, I think you could probably have a portfolio that's much grander than the one that I'm declaring to you guys for yourself. And that's the whole point of this channel, is to empower individual investors. And that's exactly what we're doing. Guys, subscribe to the message. Leave your comments at the bottom of the video. Share the message with any of your friends, family, colleagues, folks that you know out there that can benefit from the message that we're putting through on the channel. Guys, thank you so much for tuning in to this portfolio review of my flagship Roth IRA of a self-directed nature, guys. Thanks again, and good luck in your investment future.